Welcome back to our channel. So in this video, I have something special for those of you who are interested in getting into mining stocks. Unlike most sectors, mining can be a bit too technical or challenging to grasp initially. That said, you don't have to be a geologist or have a PhD in mining to understand or invest in mining stocks. What you need is a big picture understanding of some basic concepts. And in this video, I'll walk you through the various stages involved with a mining company and the risk-reward potential of each stage. As always, if you like our content, please support us by liking and sharing and subscribing to our channel. Alright, the first thing to know is that less than 1% of mineral projects end up being a mine. Now that doesn't mean that the remaining 99% do not offer any opportunity to make money. And that's because stocks of a lot of companies, even if they don't reach production, go through up and down cycles. And as investors, our goal is to get on the right cycle of a mining stock. Bottom line, the idea is that if you're selective, you can profit from even unsuccessful mining companies. The chart here shows the typical life cycle of a mining stock, starting from the inception of a mineral property towards production. And we classify mining companies into four categories. Number one, early stage, pre-resource stage companies. Number two, resource stage companies. Number three, advanced stage. And number four, producing or production companies. Now the risk reward scenario varies significantly with each stage. As you can see in the chart here, stocks in stage one, that is the pre-resource stage, and those approaching production have the highest upside potential. Now let's look at each stage in detail. Stage one refers to early stage exploration, wherein companies are involved in preliminary exploration activities to see if a project has mineral potential. Now this is a highly speculative stage. If exploration results are successful, you can see the stock pop 3x, 5x, or even 10x. A good example of a success story is a company we cover. Company name is Azure Minerals. Shares are listed on the ASX. Now shares of this company were trading at just 50 cents back in May 2023. Within 6 months, shares ran up to over $4 based on strong exploration results. Now that said, if results are not good, stocks of these companies can decline by 25%, 50%, or even more. In the second stage, once a property has been identified to have some kind of mineral potential, additional drilling is conducted to potentially find the shape and size of the deposit that the project holds. In the end, a resource estimate is calculated, and that number gives you the amount of metals that is underground the project. Now, similar to stage one, stage two is also a speculative phase where investors try to guesstimate the potential resource estimate that's going to come out from the project. Moving on to the third stage, here economic studies such as a preliminary economic assessment or a feasibility study are conducted if the resources calculated for the project can be extracted economically. And in these studies, various factors come into play, such as the cost required to build a mine, operating expense, and of course, the potential revenue from metals extracted from the project. Now, this step takes 1 to 3 years, but as these studies come closer to completion, speculative investors get back into action with an attempt to potentially speculate the outcomes of economic studies, such as the net present value or the internal rate of return, or IRR. Now moving on to the fourth and final stage. At this stage, where the market has a pretty good understanding of the project's potential, everyone knows how much metals can be extracted from a project and its economics. At this stage, a company starts permitting activities. They also start seeking financing to advance a project to production. Now this process takes 1 to 3 years, can be a relatively boring phase. As a result, stocks tend to pull back in this stage. But the excitement returns when the project approaches production, when permittings are in place and financing is secured. And after production is achieved, stock prices tend to move with metal prices or company-specific growth factors. So those are the four key stages in the life cycle of a mining stock. As you can see, the risk-reward scenario varies significantly with each stage. So before you enter into a mining stock, make sure you understand the project's potential and understand the key upside and downside factors. That's what I have for you today. Check out our platform researchfrc.com if you're interested in our sector reports and also our valuation report on individual stocks. Thanks for watching. I'll be back with you next week with more ideas.